Thank you for tuning in to another edition of the Vulcan Report. I haven't done a video in about a day or two. I've been really busy. Most of you who follow the Vulcan Report know that I stay really busy trading and managing accounts. Also, I've launched a new addition to the service on my main blog at pulsescan.blogspot.com. If you see in the right-hand top hand of the page, you'll see Black Ops Trading. That's the real-time live chat during market hours. I'm usually on there. From time to time, of course, I'll have to get away from there to place trades and do my thing, and then I'll come back. So if you post something there and I don't get back to you right away, just leave your comments and questions. I will come back and I will respond. I'm on there constantly during the market hours. I started that to answer a lot of questions and help facilitate a lot of things because, like I've stated to you all before, I just don't have time to do 100 videos a day. And there's so many things to talk about. There's so much going on in the world and in the market that there's no way in the world I can do what I do and throw up videos, as things are happening, because there's so much happening. Like yesterday, for instance, there was so much happening, but I did not have the time to stop what I was doing to make a video about it. For instance, if you haven't already viewed my video I did, the one I told you so, told you to get out of the market, go ahead and look at that video again if you haven't seen that. If you have seen it, you may need to see it again. If you haven't seen it, go ahead and see it. You owe it to yourself to look at that video. There's been a lot of price manipulation going on. The bot checks are coming back almost like every day now, and dozens of securities. I track well over 500 securities, including futures, commodities, stocks, Forex, ETFs. And I'm getting bot checks all over the place. I've been working hard. I've been in the lab as well. I've just been multitasking. I'm working myself to death because I'm trying to maximize profits for my customers, trying to prepare for what's coming. Something big and humongous and monstrous is coming. The bull trend that we're in is still bullish until it tells us it's ready to turn. And normally on the close of each day, I get that data. And then it takes me about an hour or so to do my updates. But what I've been working on is intraday algorithms to give me the heads up before these events take place. So I'll know not just 24 hours in advance, but even in real time before the event actually takes place. What I'm trying to do is get my customers in, the ones who I manage money for, get them into the events long before they happen, so that my customers get to profit handsomely and capture the entire movement, no matter what it is, up or down. So I've been working really hard to bring this stuff about and to bring it to pass. So sorry I have not been able to do 100 videos a day. I'm just busy. I don't know how long this video is going to be or how many parts it's going to be in, because I just have so much to talk to you guys about. I may have to break it down. I don't even know. But just off the top of my head, let's just get into some things. I don't like what I'm seeing. Other people on YouTube have started to make videos talking about some of the things that I've been wanting to make videos and talk about, but I just have not had the time. Also, there have been people on YouTube making videos saying exactly what I've been trying to communicate, even on the Wide Awake News radio show. I can't always quantify or qualify the things that I feel or discern or understand or sense or detect without sounding like a nut. But I just want you to understand that when I'm hard-pressed about things, I'm hard-pressed. I don't know what's going to happen. I can only tell you that I don't like what I'm seeing in the price action. Outside of the markets, who knows? But I tell you right now, we know that the markets is a rigged casino. We don't care about that. Because if the market is a rigged casino, then we're card counters. All right? The only difference is they can't throw us out of the casino. All right, we're at the blackjack table all day long, counting cards and walking away with a lion's share of the house's money. That's what we do. Now, the markets have been going up, as you can see in this chart of the Dow futures, but it's been on a consolidated basis. Little blips up, each and every day, up, down, a little. Nothing really major to write home about, not 200-300 point days. I believe that those days are upon us, though, that they're coming. Flash Crash 2.0 is underway. Flash Crash 1.0 was a test for Flash Crash 2.0. They're actually not necessarily trying to destroy the markets. What they want to do is they want to make the markets even more wild so that they can really get in and out. They're creating a back door, if you will, so that they can do everything and make it appear to be on the up and up and legal and legit, so that they don't have to come back and get sued and give all the money back that they take away from the suckers. In other words, what I'm trying to say is they're in the process of turning the stock market into the commodity futures market. They're in the process of basically integrating the commodity futures exchanges with the stock markets. Let me repeat that. They're in the process of consolidating the commodity futures markets and the stock market into one market. Now, what is the first warning signs you see of this happening? It's with the circuit breaker issues. Basically, it's a false flag. What they did is they turned off the circuit breakers and walked away and left the room and allowed the May 6th event to take place. Now, mind you, flash crashes are not uncommon. We have had dozens of flash crashes. That means absolutely nothing. Saying the word flash crash is really not a flash crash. All it was a fast market. Fast markets appear all over the place that have been going on for decades. All a fast market means is that orders are coming in faster than the specialists and the people on the floor can keep up. Their orders are coming in faster than the brokers can keep up. That's all it means. It means they're being overwhelmed, over-inundated with order flow. That's what that means. They even have rules for fast markets. And that's what I was trying to convey in the video coverage. I did live coverage of the flash crash. Those of you who have not seen my live coverage of the flash crash as it was occurring, and me giving you blow-by-blow explanations of what you were seeing and what was happening, just go to my main YouTube channel and it should automatically start playing for you. It's a very long series comprising of several videos. At any rate, fast markets, they have rules for fast markets. Fast markets are not new. They're not uncommon. They've been, around for a while, and it's just a way for them to control or get a handle on the marketplace. That's all it means. And so they have rules in place in the fast market scenario. A lot of the rules, a lot of people don't understand, and they're not privy to. Some of the rules are kind of like, wink, wink, nod, nod, unwritten type rules, but they're nevertheless they're rules. Okay, like honor among thieves, so to speak. Okay, one of those rules is that, and on certain platforms, when you place orders to, they'll give you a message. It'll say like over-the-counter trades, stop losses are pretty much due to the market maker's discretion. They can cancel your orders without any explanation, without reason, without cause, and without any heads up. It can just cancel. All right. Okay. That's done to quote-unquote protect the specialist. Supposedly, when order flow is coming in so fast, it's hard for them to keep a track of things, and it's how it is. But even with that, if you know how to pimp the tickets, if you know how to put in the different market types and know what they mean and how to use them and when to use them, then all that stuff can work in your advantage, even if you're on the wrong side of a bombardment like that. And I should know because I've been in many a fast market. I've even been in lock limit markets. Those of you who are unfamiliar with commodity futures trading, Lock and limit moves, and when the market has moved to a certain price point in a given day, whether it be up or down, they cease trading in that direction. You can no longer accept tickets in that direction. So if you need to place a sell order to get out of the market, tough luck. Okay, it's that kind of scenario. All right, now back to what I was saying. In a fast market scenario, you don't want to really panic along with the herd anyway. Because, you know, for the most part, I mean, I'm giving away way too much information. I already know that. A lot of this stuff I'm giving away is shop info. You know, it's not proprietary info, but it's shop info. All right. If you worked on the street, then everything that I'm saying to you is not new. It's old hat, and it's probably boring to you. So you can go ahead and kindly click out of the video and move on to something else. All right, for those rest of you who are already committed 11 minutes into the video, my bad, I should have said so earlier. But anyway, a lot of times when I'm just speaking off the cuff, off the top of the dome, I don't have a written script. I'm just trying to give you my heart here. All right, so in a fast market scenario, Flash Crash 2.0 is going to be a little bit more orderly, if you will. Meaning that they got their stuff together now. They know what the outcry of the public is going to look like because they've already done it. They've done a test on May 6th, so they already know what to expect, what to happen. And so it's cool now. And so they can do it. They can spin it in the media. Notice how the media got right on it and was talking about a fat finger error. Because they know that the general public is ignorant. I don't mean ignorant in a derogatory sense. I mean ignorant of the inner workings of the marketplace and how Wall Street works. All right, sure, they know buy low and sell high or whatever, but those are just cliches. What does that really mean? You know, when it comes down to trading, it's buy low and sell high if you can, but also buy high and sell higher. Okay, that's what that means. Or sell high and buy back lower. All right. So anyway, I digress on that. How to prepare for Flash Crash 2.0. Flash Crash 2.0 will look similar to May 6 Flash Crash, except for this time it's going to be a little bit more violent and probably reminiscent of 2008. It's going to be along those lines, where it could just jump and skip on you. See, on May the 6th, prices didn't really jump and skip. They kind of stutter stopped. They, like, for a minute, prices would freeze. Like, you know, the market would go down and, you know, 100 points and freeze and drop another 100 points and freeze and skip and go to 200 points. It was kind of orderly. All right, so you could have gotten out of your trades before the Dow hit, you know, negative 1,000 that day. And not everything moved immediately like that. So you could have done some things prior to that. Plus, the flash crash didn't happen at once. The market was already down substantially before things really got heated up. They just dumped on you without warning after the market was down like 100, 200 points or 300 points. I think it was around 300 points, or a little more than that. It was around between 200 to 300 points, if my memory serves me correctly, before the flash crash triggered, before the algorithms kicked in. So it was around 200-300 points. Then, and you know what's funny about it is that the old circuit breakers for the futures, the Dow futures and the S&P futures, was around that 350 point price range. So it's kind of funny that that's when things broke down at that price point. Anyway, stay tuned to part 2. I'm running out of time.